Welcome back. Up now, we have Forum Daily's weekly market update with Catherine Murray, host of the Buck Stops here. Take it away, Catherine. All yours.
Hi, everyone, and welcome to your weekly market recap. I'm Catherine Murray. We are seeing North American equity markets move higher today. The TSX up by about 0.3%, and those U.S. markets up stronger than that, up by about 0.5 to 1.5%. Stepping back, I think you can really make a case for both the bull and the bear case within the market, and that's why you're seeing a bit of a mixed picture over the past week or so in terms of the market performance. In terms of the bull case, there is the view from investors that inflation is very much subsiding. PPI, in fact, came out this morning cooler than expected. And that is giving investors a view that the US Federal Reserve will, in fact, continue to stay on the sidelines and not raise interest rates. The other view, in terms of why the Fed would stay on the sidelines, is because they've tightened so aggressively, raised rates so aggressively over the past year to the tune of 500 basis points that has put a lot of pressure on the banking system. We saw that with the failure of Silicon Valley Bank as well as Signature Bank. And we're also seeing a pullback in economic growth and activity. And again, that is part of the US Federal Reserve's goal. They want to pull back the economic growth engine in order to alleviate the inflation pressures that we have been seeing and witnessing over the past year. So, in other words, in their minds, what they've been doing might actually be working, and therefore they can take the foot off the gas in terms of not raising rates aggressively. That's the bull case. And one other point I would mention as well, China's economic data was quite strong, specifically their exports surged. And that is positive as it relates to the global growth picture. So all of that is the bull case. As it relates to the bear case, though, there's the view that various Fed speakers have been highlighting the fact that they want to make sure that they combat inflation. And there is the view that they will continue to raise rates to the tune of perhaps even 25 basis points in the May time period and will not cut in 2023. There's also, of course, the view that all of the tightening that they have been putting forward over the past year will, in fact, lead to a hard landing, a recession. And we're also, of course, seeing growth come down. And earnings are very much in focus. We kick off the first quarter earnings season tomorrow. So a lot of unknowns in terms of how companies will perform, the margin pressure they've seen, what they're seeing in terms of consumer demand and the outlook, and will they have to lower their earnings guidance? So that's a big question mark, and where the bears are concerned. And they obviously believe that companies will have to lower their earnings outlook. I point out as well that has already occurred in many cases in terms of the analysts lowering their earnings expectations. We are seeing that the earnings expectations for the S&P 500 right now are down 6% year over year. That is a very large number versus what we have seen historically in terms of earnings declines and or earnings growth over the past number of years. As I mentioned, the big banks kick off the earnings season tomorrow. So Citi, Wells Fargo, as well as JP Morgan. And I would expect to see and hear from the company managements a slowdown in net interest margins, a pullback in loan growth, likely increased trading activity. Recall that the first quarter was very strong for the markets, and that often causes more people to be participants in the market and trade. So watch for that. As it relates to the TSX, we are up mildly on the day. WTI is up slightly, so the price of oil is up. Following a 2% gain yesterday, we're actually seeing WTI at the highest level in 5 months. And that is also helping to move the Canadian dollar higher versus the US dollar. In terms of news items this week, all eyes were on the BOC, the Bank of Canada. No surprise, somewhat uneventful. They did not raise rates. They held steady at 4.5%, very much as expected. And they do expect that inflation will moderate to 2% by the end of 2024. The Bank of Canada will continue to be very data dependent. And if it does not move lower, they will be very, as I said, data dependent and will raise rates in order to curb the demand picture. As it relates to other items on a business front, Freedom Mobile is vowing to undercut the telcos by 20%. We also saw Glencore increase their bid for Tech, but Tech, the board there, has rejected the second offer. And lastly, the Conservatives are requesting Twitter to label CBC assets as government-funded media. I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here, which airs on Sundays at 9 a.m. Eastern.